Hey, everybody. Welcome to this week's 5-minute real estate update with Joe, your economist of choice for the Chicagoland real estate market. Really grateful to be here today. Wanted to talk about perspective today. Going back the last 3 years from 2020 to 2022 and talk a little bit about the narrative that you may be hearing in the national news about home sales being down in 2022 and dissect that a little bit because everything's about perspective. While it's true that home sales were down in 2022, mostly because of a slower Q4 after the Fed's efforts to ease inflation by raising interest rates. If you look back all the way back to 2008, 2022, there were more home sales than any other year except for 2020 and 2021. And in 2020 and 2021, we were in the thralls of the coronavirus pandemic, and there was all kinds of uncertainty going on in the economy, and that trickled into real estate. What the Fed did in 2020 was start to lower interest rates drastically. Okay, the housing market is driven by supply and demand. And when interest rates fell to historical lows in the low 2% range for a 30-year fixed mortgage, it created this incredible demand for housing because people knew that this opportunity wasn't going to last forever and they needed to get in the game and buy a house. So interest rates fall to historical lows, buyer demand goes up exponentially. Well, on the supply side, because of inflation, we had lumber prices quadruple in a period of just a few months. And so new home starts went down drastically in 2020 and 2021 because of all the shortages related to the pandemic. So we had this perfect storm of really low supply and extraordinarily high demand. So if you have a very short-term view of the market and you compare 2022 to 2021 and 2020, yeah, home sales are down slightly. But the big picture is that home sales in 2022 were greater than any other year between 2022 and 2028 or 2008, with the exception of those 2 years. Going into 2023, I expect that by the second quarter, we're going to see interest rates normalize back into the mid 5% range, hopefully getting close to all the way down to 4% going into the future. We still have really low supply of inventory on the market, particularly in Chicagoland. I was looking just in Downers Grove, and right now Downers Grove only has about a month and a half of inventory available. So, if no new listings came on the market at the current sales rate, every single home on the market would sell in the next month and a half. So for some added perspective, we consider 5 months of inventory to be a balanced market. Anything under 5 months of inventory is a seller's market. Anything over 5 months of inventory is a buyer's market. So you can see where we're at on the supply side. With interest rates normalizing, I think we're in for an incredible real estate market in 2023. I think we're going to be heading back towards that balanced market where there's opportunities to find a win-win for buyers and sellers for the first time in the last 2 years or so. So if you want to talk a little bit more about your real estate goals, if you want to learn a little bit more about my perspective on the market for 2023, it always backed by data. I always just track the important metrics that show us exactly what's going on in the real estate market. And I'll have an honest and open, candid conversation with you about real estate. Thanks for watching. Appreciate you guys, and I'll catch up with you real soon.